So in front of your screen, what do you see in front of your screen? What will you call what you see in front of your screen?
Logos.
These are logos. All right.
Brands.
Logos or brands. Okay. So these logos relate to specific brands. You have the Nike logo, Samsung, Coca-Cola, Apple. So just by seeing the Apple logo there, you know that that company is Apple. You don't need to you don't even need to have words. The swoosh or the tick, you know that that is Nike. You don't even need to have the word Nike written there. So what are all of this? What are these logos? What are they called in accounting? These are types of intangible assets, and this is what we are going to be looking at today. So the learning outcomes for this lesson, you should be able to define an intangible asset, and you should be able to identify intangible assets. And lastly, you should be able to recognize and measure intangible assets. Right. So let's look at the scope of IAS 38. So IAS 38 is the standard that deals with intangible assets. The purpose is to prescribe the accounting treatment of intangible assets unless that asset falls under the scope of another standard. So for example, goodwill is in terms of business combinations, in terms of IFRS 3, financial assets, you will look at it in terms of IAS 32, and mineral rights related exploration and development expenditure are outside the scope of intangible assets. So rights to look for minerals, they say oil exploration, that falls under that is outside the scope of intangible assets. All right. So how will we define an intangible asset? Before defining an intangible asset, it first needs to meet the definition of an asset. All right, it first needs to meet the definition of an asset. Now, the standard IAS 38 uses the definition of assets from the Conceptual Framework of Financial Reporting 2010. It doesn't use the 2018 definition. So the 2010 definition of an asset says an asset is a resource controlled by an asset as a result of past events and from which future economic benefits are expected to flow to the entity. This is the definition from the Conceptual Framework of Financial Reporting 2010. What is the difference between the current definition of assets that we use? What is the current definition of an asset? Anyone? The current definition of an asset. This you should already know. You did this last year.
Tangible asset. It's a tangible item that is to be used from a long period.
That is a definition of PPE, property, plant, and equipment. All right. But we have the definition of
economic resource.
Okay, yes. Go ahead. You're correct.
It's an economic resource controlled by the entity due to past events.
Exactly, you end there. So the current definition is a present economic resource controlled by an entity as a result of past events. So we don't have that last part, that last bullet which states that and from which future economic benefits are expected to flow. But then the 2018 definition goes on to define an economic resource as a right that has the potential to produce economic benefits. So it adds that part where an economic resource is a right that has the potential to produce economic benefits. All right. So the current standard IAS 38, which is from one of the older standards, it still uses the old definition of an asset, and it's still relevant. And even the recognition criteria, as we go ahead, it will use the old recognition criteria from the Conceptual Framework 2010. So in order for, before we can define an intangible asset, it first needs to meet the definition of an asset. So once it meets the definition of an asset, then we can go on and define an intangible asset from there. And so an intangible asset is an identifiable non-monetary asset without physical substance. An identifiable non-monetary asset without physical substance. That's the definition of an intangible asset. And we'll look at the specific components. What does it mean when we talk about identifiable? What does it mean when we talk about non-monetary? What does it mean when we talk about without physical substance? So how do we recognize intangible assets? The intangible assets will use the recognition criteria from the 2010 conceptual framework, whereby there must be probability of future economic benefits flowing to an entity, and the cost of that intangible asset should be measured with reliability. I'm sure you know this recognition criteria. There must be a probability that future economic benefits associated with the intangible assets will flow to the entity, and the cost of that intangible asset can be measured with reliability. Okay, sorry, what is that? All right, so let us move on. Let us look at some examples of intangible assets. We have trademarks, patent rights, goodwill, licenses, copyrights, music, computer software, movies, customer lists, import coasters, franchises, research, and development. How are these intangible assets? Let us just maybe explain one or two. Can someone just pick one from the list, or even any other intangible asset that you might know, and explain why it's an intangible asset? For instance, a patent. Can someone explain what is a patent? What's a patent? I'm waiting.
A licensor.
Okay, we have licenses there as well. That is different from a patent. Or do you want to explain what a license is?
The license in that case uh, is an intangible asset because okay, I don't know. So so it's fine, sir.
Okay, someone else want to try?
But patent rights are like permission to use.
It's a permission to use something. Okay, let us look at, for example, we've just we're in COVID, right? And vaccines were developed, all right? So we have pharmaceutical companies that developed vaccines. So you have the Johnson & Johnson vaccine, you have vaccine by Sinopharm, you have vaccines by, I'm forgetting the other vaccines. Okay, so these companies have developed the vaccines. They use their know-how, right, in order to develop the vaccines. So any income that is derived from the vaccines, they should be entitled to the income, right? So they have patents over those vaccines, all right? So it's something that protects their inventions, that no one else can go and copy their invention without actually providing them income, because they took their time, they developed the vaccines, right, with their know-how, right? So they have the right to gain income from that, and they're going to protect their rights through patents. Okay, they protect their rights through patents. They do not just give their knowledge to anyone to develop the vaccines. All right, so other types of intangible assets, right to income from music. Let's say you've written the music, you've composed music. All right, the music is published. As the author of that music or the composer, you are entitled to receive royalties from the music that you have created, isn't it? Okay, so you can consider such royalties as a right to receive or the royalties will be income that you receive from your music. Your music is an intangible asset for you. You will have a copyright of the music. No one can go and actually distribute the music without you. If they distribute the music without you legally and they earn an income from it, you can sue them because you are the composer and you have the rights to receive income from that music that you have composed. Computer software, right now, we are on Microsoft Teams. So gets licenses, or NUST pays a subscription fee to Microsoft in order to use Teams. All right. So Microsoft has the right to generate income from Teams, and the income will go to Microsoft. Teams is an intangible asset. It's software. Software is an intangible asset for Microsoft. All right. So let's go back to the definition of intangible asset. We say it's an identifiable, non-monetary asset without physical substance. But then it might be that an item has both physical and non-physical aspects. What happens in this instance? You have to choose whether you're going to apply IAS 38 intangible assets or whether you're going to apply IAS 16 property, plant, and equipment. So you have to determine which aspect is of more significance. All right, which aspect is of more significance? If the PPE aspect is more significant than the actual, let us say, software, then you will treat that intangible, or you will treat that asset as PPE under IAS 16 and not as under IAS 38. We'll deal with an example to illustrate this concept. So we are going to look at example 1 and 2 from your prescribed textbook, Gripping Up. I will open. So I have the software Adobe Digital Editions, and the publisher of the books, LexisNexis, has provided me the ebook. All right, they provided me the ebook to Gripping Up. This is not a PDF file. This is an actual ebook that LexisNexis has provided to me. So I am not infringing on their copyright. I have not duplicated this book. Okay, so LexisNexis as the publishers of Gripping Up, as the distributor, have a right to gain income from actually publishing the books together with obviously the author that has published this book. So we're looking at example 1 and 2 on page 417. I always refer to the prescribed textbook. You have to go and read the relevant chapter. You have to go and read the relevant chapter in the textbook. Sorry, I think I have, it was for page 473, example 1. Okay, this is the first example we are dealing with. Physical substance and a fishing license. We want to determine whether this is an intangible asset or whether it falls under PPE. So the main thing that we said is that look at the aspect that has more significance. Example 1, D Limited acquired a fishing license. The directors insist that it is a physical asset since it is written on a piece of paper. Briefly explain whether or not D should recognize the license as an intangible asset. What do you think? Should this fishing license be recognized as an intangible asset, or should it be considered as part of PPE since it's written on a piece of paper, and that piece of paper is something that is physical and it can be seen? What do you think? You may go ahead and speak. So something like this, maybe you'll get, maybe this should be a 3-mark question or a 4-mark question. So it's not enough to say this is PPE or this is an intangible asset. You have to explain why, or whether it should be recognized as a PPE or whether it should be recognized as an intangible asset. You have to provide reasons. Okay. Can you?
Is an intangible asset because the license gives us, a kind of permission to do something, and that or right to do something, and that the right, is cannot be seen or touched.
Exactly. You're 100% correct. This is an intangible asset because what is important here is that what you have been provided is a right to fish. So although the fishing license has a physical form, all right, that's the legal documentation, the license is considered intangible rather than tangible, since the most significant aspect is the licensed ability to fish rather than the physical proof thereof. So you were granted a right to fish. So for example, in Namibia, we always hear about companies getting fishing quotas. So some have the rights to fish for horse mackerel, let's say 10 tons. Another one might be given a right to fish for 100 tons, etc., etc., etc. Okay, so what have they been granted? They've been granted the right to fish. The right to fish. Other companies cannot just come and fish in Namibian waters without obtaining the right, the fishing license or the fishing quota from the government. All right. So just because it's written on a piece of paper, the piece of paper is not a tangible asset, right? But what the intangible asset is the right to fish. And that right to fish has the potential to produce economic benefits. So for example, if you have been granted a fishing quota of 100 tons, for instance, okay, so your company is allowed to extract a certain type of fish up to 100 tons, all right, up to 100 tons. So you can benefit from the sale of the fish thereafter. All right, so the right to fish is the intangible asset. Let us look at example 2. P Limited acquired a machine that incorporates specialized software that monitors core functions necessary in the operation of the machine. It enables product design and it manages output quantity and quality. So you have a machine that has specialized software, and that specialized software monitors core functions necessary in the operation of the machine. It enables product design and it manages output quantity and quality. Briefly explain whether or not fee should recognize the software as an intangible asset. Should the software be recognized as an intangible asset? Can you explain? What will we do here? All right, I'm waiting.
The software is initially considered to be intangible asset, but I think that in this case, because it's used, I mean, it's needed for like the machine to operate, and the machine is PPE. So I think it should be considered as PPE.
Okay. You think that it should be considered as PPE. So in this aspect now, this is where professional judgment comes in. Which aspect is more significant? Is it the machine or is it the software? Okay. In this instance, you are actually correct. All right. Let us read the solution. The most significant element would be the tangible machine, since the software is integral to the machine. All right. It is not standalone software, but it is software that has been designed specifically to enable the machine to operate. So for example, if you buy, okay, I don't use a phone as an example because, all right, we can use a phone. So if you buy a phone, if you buy a Samsung, the Samsung will use Android software, right? Or if you buy an iPhone, the iPhone would use iOS, right? It would use the iOS software. Okay, but now what are you getting? What are you getting? When you buy a phone, the aspect that's important to you is the physical phone, isn't it? Right? You don't really care what type of software enables the phone to operate, isn't it? You don't care whether it's iOS that enables the iPhone to operate or whether it's Android that enables the Samsung phone to operate. You're specifically looking for your phone, all right? So you would probably classify your phone as equipment, okay? So this is the same thing here. You have a specialized machine. You have a machine that needs software to operate that machine. And that software is integral to the machine. So when you buy the machine, the cost of the software is treated as part of the machine. and that machine should be treated in terms of IAS 16, property, plant, and equipment. However, if the software was standalone software that can be used on a different machine, it can be accounted for as an intangible asset. All right. So, for example, let me come back to the example of the phones. We have found out that you can have a phone that either uses iOS software or it can use Android.
May you please repeat that? About the software intangible.
About the software. So I say
yes,
that
and intangible assets.
I say that if the software is integral to the machine, then that software, the cost of the software is treated as part of the cost of the machine. It's not treated as an intangible asset. It would be treated as PPE. All right. And I was giving an example similar to a phone. Okay. So I was saying Android phones, whether it's phones like Samsung, phones like LG, etc., they use the Android software. Okay, when you're buying the phone, you don't really care that it's using Android software. You just want the phone, isn't it? But that Android software is integral to the operation of the phone. Without that Android software, you will not be able to operate the phone. All right. So since it's integral to part of the phone, it's considered as part of the cost of the phone, and your phone would be considered as equipment. All right. Your phone would be considered as equipment. So this is the same. If you have a machine and you have software that is integral to that machine, that software is considered as part of the cost of the machine. However, you might have an instance where you have standalone software. You can buy the software separately. Okay, so for example, I want to read PDFs, and in order to read a PDF document, I need Adobe PDF Reader. Adobe PDF Reader, I can use Adobe PDF Reader on an iPhone. I can use Adobe PDF Reader on a Samsung. I can use Adobe PDF Reader on a Google phone, right? So that software I can use to different phones. It's not integral to an operation of the phone, right? I can use it on different phones. I can use it on a computer. So that software can be sold separately. So in that instance, if the software is standalone, then that software can be treated as an intangible asset because the software can now be used on different machines or different phones, right? So in that instance, it is not integral to the operation of that specific asset, and that type of software will be considered an intangible asset. Are we together?
Yes, sir.
All right, great. Let's see, I think there might be something in the chat. Okay, so I think we've dealt with that. So let us go on. Now let us go back to the definition of intangible asset. Intangible asset, we had three parts that were relevant. We said intangible asset is an identifiable, non-monetary asset without physical substance. Now let us look at these aspects. What does it mean when we talk about identifiability? That's the first part that we're going to look at. What does it mean when we talk about something that is identifiable? An intangible asset is identifiable if it is separable or it arises from contractual or other legal rights. It is separable or it arises from contractual or other legal rights. All right, so let us look at the first part where we talk about it is separable. An item is separable if it is capable of being separated or divided from the entity and sold, transferred, licensed, rented, or exchanged, either individually or together with the related contract. All right. So it is capable of being separated or divided from the entity and sold, transferred, licensed, rented, or exchanged either individually or together with the related contract, identifiable asset, or liability, regardless of whether the entity intends to do so. All right, let me try and explain this. For example, that machine that had software that is integral to the operation of the machine, we said that software is not, that software would not be something that is separable. And that's why we treated the machine as a PPE item, because the software was part of the machine. It was not able to be separated from the machine, right? All right, so it's not be, you cannot use the machine without the software, right? So it's not separable. But if you could sell the software separately, you could rent out the software separately, then that would be an intangible asset. That would be an intangible asset. So something like Microsoft Teams, for instance. Microsoft Teams can be used on your phone. It can be used, any brand of phone that you have, right? It can be used on your computer, any brand of computer that you can that you have. You can transfer it to a different computer, etc. Right? It is not unique to a particular computer. I'm using a Lenovo computer right now, and I'm running Microsoft Teams. I don't know what you're using. Maybe you're using a cell phone, right? Maybe some of you are in the library using the desktops and you're running Microsoft Teams there. So in this instance, Microsoft Teams is able to be licensed separately, okay? So it is not unique to a particular computer or particular phone, etc. So in that instance, that it would be considered an intangible asset, right? It would be considered an intangible asset for Microsoft. It would be considered an intangible asset. In our records, the software that we're going to use, okay, you can treat it, that there are two different ways to treat it. Either you can just expense it, or if it's going to be used over a period of time, then you can treat it as an intangible asset. You can treat it as an intangible asset. We'll look at this when we look at recognition and measurement. Are there any questions? There are no questions? Further, an intangible asset. So the first part we looked at, we said intangible asset is identifiable if it is separable. The second part is it may arise from contractual or other legal rights. It may arise from contractual or other legal rights. So we have to look at intangible assets that results from contractual or other legal rights. Intangible assets may stem from contractual or legal rights, regardless of if they are separable. So something that comes from a legal right. This is where we go back, let's say, to the fishing quotas. All right, the fishing quota, what happens? The government has granted you a right to fish in Namibian waters, right? So you have that legal right to fish from Namibian waters. And we now do not look at whether this is separable or not. It will automatically meet the definition of an intangible asset because it arises from a legal or a contractual right. So a fishing license will arise from a legal right. The government has given you that right to actually go and fish in Namibian waters. All right. Other things, you may have contractual obligations, okay? So what happens here? Contractual rights. intangible assets that arise from contractual rights. The contractual legal rights, this is basically the same thing. Let us say Premier League. I don't know if you like football. I like football, so I watch the Premier League. Also like motor racing, I watch Formula One. Then you have Formula One, the company that owns it will sell the rights to broadcast the races to different TV stations, or the Premier League will sell their broadcasting rights to different TV stations to broadcast the English Premier League. So you'll have Sky Sports, or you'll have Super Sport that can provide provide or that have the right to broadcast the English Premier League. So they've signed a contract, let us say for 5 years, right? So for 5 years, SuperSport has the right to broadcast the English Premier League. So because SuperSport has the rights to broadcast the English Premier League, no other channel may broadcast the English Premier League, let us say in Namibia. So that is why, for instance, maybe NBC cannot broadcast a live game because they do not have the rights, right, from the Premier League to broadcast that. Okay, so this is an example that of a contractual right that gives you the ability to broadcast a certain events, or such as the Premier League games, etc. Okay, any questions? No questions. All right. So we've dealt with identifiability aspects. Now let's look at control of an asset, control of an intangible asset. So before we identify an intangible asset, it must meet the definition of an asset. And the definition of an asset using the conceptual framework of 2010, we said that an asset is a resource controlled by the entity as a result of past events and from which future economic benefits flow. All right. So let's go back to the definition. A resource controlled by the entity as a result of past events and from which future economic benefits will flow. So let's look at the aspect of control. Control is evidenced if the entity has the power to obtain economic benefits flowing from the underlying resource, and it has the power to restrict others to those benefits. So you have the right to obtain economic benefits from a resource, and you can also restrict others from actually benefiting from those benefits. Control will generally result from legal rights enforceable by law. Control generally results from legal rights enforceable by law. For example, the right to fish. All right. So if you have the right to fish, you have control over that intangible asset. Okay. You have control over that intangible asset because you have the right to benefit from the resources, from the fishing that you are going to do. No one else can benefit from that. But we've heard, even like in the Namibian context, that some companies got fishing quotas, and then what did they do? They sold those fishing quotas to other companies. And they were allowed to do so. They were allowed to sell those fishing quotas. So they benefited from they got the license, the fishing quota, right? And how did they benefit from that fishing quota? They have the license and then they sold it. They didn't want to fish themselves, so they sold the rights to another company. The other company is going to fish, but they gained the benefit, or they have received now the money from selling those fishing quotas, another company now can go and do their fishing, and that company will now have the quota in their hands. Okay. Any questions? There are no questions. Okay. So when an intangible assets meet the definition of intangible assets, all right, if it's identifiable and you can control that intangible asset, then it meets the definition of an intangible asset. So let us look at specific intangible assets. Market or technical knowledge. Market or technical knowledge is only controlled if protected by legal rights. So let us look at things such as copyrights or restraint of trade agreements. Okay, so what is a restraint of trade agreement? A restraint of trade agreement means that you are not allowed to go and fulfill your trade. So for example, if I was working in Formula One for Mercedes company, so Mercedes is a car company and they have cars that race in Formula One, right? And let's just say whatever position I was in, let's say I was in a high ranking position. So what normally happens is that a lot of knowledge is gained by the staff that is working there, okay? So a lot of, in order to raise you, there's a lot of technology that is involved, you know, you would want to protect that knowledge. So if that particular worker now wants to go and work in another company, so let us say the employee wants to move from Mercedes, Formula One racing company to Ferrari, to the Ferrari company. Normally, what would happen is that you would not be able to resign and just go directly and work for the competitor. You will not be able to work for Ferrari, for instance, right? Because they're saying you will take our knowledge that we have developed and you are going to use it in that other company, and that company is a competitor. So you will sign what is called a restraint of trade agreement. So this might be for a year or so. So for a year, you will not be allowed to go and work for a competitor. After that year is up, then you can, you will be able to work. So during that year, you would have signed that restraint of trade agreement, and they will pay you a certain amount of money so that you do not work for the competitor. Okay, so we are saying that an intangible asset such as restraint of trade, it is controlled. The aspect of control is there if it is protected by legal rights. So that restraint of trade document, it is going to be signed by you. It's going to be considered a legal document. So you have to go through lawyers, etc. And because you are not allowed to go and work, right? That restraint of trade is considered an intangible asset because you're trying to protect your technical knowledge. You're trying to protect your technical knowledge so that an employee cannot go and share it with another company. However, normal staff skills, right, are not controlled. Normal employee skills. So I'm a chartered accountant, for instance, and I want to go and work for F&B. All right, I'm working for Nedbank now, and I want to go and work for F&B. I can put in my resignation. Maybe I'm just told I need to give in 1 month notice. I give a 1 month notice, and I can jump ship and go and work for F&B. Nedbank has no control over me, right? Nedbank has no control over me. That is why we say staff skills, regardless that there's an employment contract. The employment contract makes provision that I can give 1 month notice, right? And I can go and work for a competitor such as F&B. So those staff skills, and Nedbank cannot capitalize those staff skills and say that this is an intangible asset, all right? They do, because they do not have control over it. Also, things like customers. A business cannot consider customers or a market share that they have as intangible assets, all right, as intangible assets, because you really do not have control over what a customer or potential customer does. Today I can go and do my shopping at Pick n Pay. The next day I can decide to go and do my shopping at ShopRite or at Checkers. Okay, so just because I thought that I have some loyal customers, it doesn't mean you have control over it. It doesn't mean you have control over it. However, there are things like customer lists that might be considered as an intangible asset. It might be considered as an intangible asset. So what happens, especially in this technological age, we have situations whereby companies can share your data, can share your information with other companies. And that is why these days protecting your identity, especially your digital identity, is very important. Okay, so when we go online, a lot of information is shared, and different companies can use that information and actually sell the customer information to other companies. Okay, so things like if you go on Facebook and you like a certain, let us say, you like a post about houses, you like a post about holidays and travel and stuff, then you start seeing a lot of information. Now you go into Google Chrome and then you just see an advert of something that you liked in another app. Okay, this way your data is being shared. Your data is being shared between different companies. Your data is being shared between different companies. But what some companies do is actually now go and sell your data. And in this way, that information that is sold can be considered as an intangible asset. All right, that can be considered as an intangible asset. Are there questions? There are no questions. Let's continue. Okay, so we're going to end here at measurement. How do you measure intangible assets? Intangible assets are initially measured at cost. Okay, so this is similar to PPE, it's similar to investment property, but they're different elements of cost because these are now intangible assets. Right, so let us look at purchased intangible assets. If you buy a fishing quota, then your purchase price would be considered the cost of that intangible asset, which is that quota. However, you must deduct any discounts, you must deduct any rebates. A rebate is just a type of discount. Any refundable taxes such as VAT, you should deduct. All right, so those would be deducted from your purchase price. And then you have to have directly attributable costs that are necessary to bring the asset to the condition that enables it to be used by management. Now, here we have a few directly attributable costs. This is intangible assets. You will have costs such as professional fees and employee benefits costs. So in order to get a restraint of trade agreement, for example, you have to have lawyers that will help draft that agreement, etc. So those are professional fees that are incurred in getting that restraint of trade agreement. So that must be included as part of that intangible assets. Employee benefit costs. Let us look at internally generated intangible assets. So software like Microsoft Teams. Microsoft Teams did not just come out of nowhere, right? They're a group of workers or Microsoft employees that actually developed the software, isn't it? So all of those developmental costs, including the employee costs of the workers that worked on developing Microsoft Teams software, that must be included as part of the cost of developing the software. And we know that computer software, which is separable, is an intangible asset. All right. Cost of testing. So Microsoft, when they're developing Microsoft Teams, they would have to test before putting it out to the public, test whether the software is actually working as it should be, isn't it? And they're going to incur cost to do that testing. That cost will be included as part of the cost of the intangible assets. Intangible assets acquired under deferred payment terms are recognized at their present value. So when we talk about deferred payment terms, we already did this when we dealt with PPE. If you pay it over a period of time, all right, an extended term. So let us say you're supposed to pay this within 30 days, maybe you've been granted 90 days, or etc., a year, let us say, that you will have to find the present value of that amount in order to calculate the actual cost of the intangible asset. The excess you will allocate to interest. We've done this when we dealt with PPE. We looked at examples of how we would calculate the present value when dealing with deferred payment terms. Exactly the same way you'd calculate it for PPE is exactly the same way you'll calculate it for intangible assets. The last thing that we're going to look at is exclusions. These costs are almost similar to the ones under PPE. Cost of introducing a new product or service, such as advertising costs, cost of conducting business in the new area or with the new class of customer, including staff training costs, those are excluded. Administration and general overheads are excluded. Incidental income and expenses that are incurred or earned during the development of or acquisition of intangible assets are excluded from the cost. And when does recognition cease? Recognition of cost ceases when the item, or in this instance, when the intangible asset is in the condition as intended by management. In order to reinforce this, please do example 7 on page 476 in gripping gap. I will then see you tomorrow because our time is up. All right.